a move down and move back up. And what I do is I look at that bottoming move, and I look at the volume. And here, this bottom was about 60,000 Bitcoin. This was a 90,000 Bitcoin bottom. This was an 88,000 Bitcoin bottom, and then this was a 111,000 Bitcoin bottom here. And the price action, the recovery time on these are becoming quicker and quicker. This bottom took about 4 weeks. This one took about 2 weeks. This one took like 3 days. This one literally resolved itself in like a day or two. So pretty interesting. I do think we're going higher, with this making new highs back above these previous bars here. All-time highs are just a matter of market activity. The weekends have been pretty active in Asia, so we'll see. But it might be a Sunday evening type move that we go higher.
Yeah, even Peter Brandt posted out the measured move to 14,000 that you've been talking about for months. So
yeah, we were thinking 10,000 by the end of January, and it beat it by a month basically. I know some other, like John's models had 10,000 exactly on December 1, so that was pretty amazing, which would indicate that 2018 is going to be probably a year unlike any other in any asset class ever. It'll be pretty wild.
Yeah, for sure. And then looking at Litecoin here too, it took out the high that it set before it reset.
Yeah, so that's important too, because if you look at the daily Litecoin chart, every time this thing's ever gotten ahead of itself, it's always been pulled back to this longer term trend line. And for the first time, we've had a pretty big move up, and instead of pulling all the way back down like it usually has, it's pulled back to its fib buy zone and moved higher and made a new high. So that's to me, that's pretty telling that it's probably going to go up and get out of this double digit range and get into the triple digit range, and probably for good.
Well, I think the atomic swap probably changed everything. So I think people are starting to more clearly see how this whole payment system linked with a non-parasitic stored valued coin is going to transform everything. I'm looking for the big move in Litecoin now. Hey, a 40% move in Bitcoin by March, Litecoin could just rock it, because the 1 to 100 scale might be a little bit undervalued in my view.
No, here's the thing with Litecoin. It's one of the three that's easily accessible because it's on Coinbase. And love Coinbase or not, they're making it extremely easy for people to access crypto. Call it the Apple of crypto, if you will, because it's they're trying to aim for a user-friendly entry. They still their website and their whole infrastructure needs to scale better. Right now, they're not doing a good job of that. But when you get in there, what can you buy? You can buy Litecoin, Bitcoin, Ethereum. So anything that's going to be on that platform, I think, is going to have a leg up on adoption. And Litecoin's been around so long that we're going to see, I think the growth. See, you got to fight through supply, right? It's been around since 2011, so you got to fight through supply. Long time people holding it, and so you're going to run into a point where, kind of like with Bitcoin, you get past this point of you eat through all that sell supply that people have been holding for a long time, and now we go into the growth phase where it's moving up, and I think we're just eating through that.
Well, it's gone up 2,000% a year. It's not like it hasn't moved. I think people, most people only look from when they started becoming interested in Litecoin. And Litecoin and Ethereum look like they haven't done anything because Bitcoin has done everything. And now Ethereum's starting to make its move, and Litecoin is a beautiful move. I mean, when I started buying it was in the $20, and look, it's up 5x. I mean, these are these moves, and I've been trading since 1991. You and I were joking before. I haven't seen moves like this since 2011, when gold and silver, trading options, where we're producing these kind of returns. And the thing I like about this over everything else, it's so easy for people to understand. It's like, it's once people get it, once they have that conversion of, okay, this isn't going away, it's not difficult at all for people to say, okay, buy it. And if you're a holder, you just hold it. I was talking to some friends this morning that were, you know what, I got my stash that I'm never going to sell, and then I got my stash that I'm going to trade with. And I think more and more people will adopt that approach.
Yeah, and the other thing too is that in the entire history of Bitcoin, you've always had people that would dump. They call them the whales, right? So they early adopters or whatever, they've accumulated a lot of coins, so they were able to kind of almost dictate market action or even initiate sell-offs. And what I'm seeing now is you see these attempts at large market order sells, and they're at technical levels where you would do that, like a blow off top type situation, but they're just getting eaten. Like normally, what would have started a 2 to 4 week, pullback is just getting consumed. And I'm seeing a lot of retail buying out of Asia, and that's just simply because I see a lot of retail size orders that come through during Asia, the trading hours in Asia, and so that phenomenon I think has been helping. But there are you do see some institutional size orders come in, and I think they're just accumulating methodically all through these levels.
And I think people don't grasp even the geopolitics of some of this stuff. Most of the early miners, where I think probably still most of the coins are sitting in Asia. A lot of them are in China, at least on Bitcoin. And we don't know. I mean, what a great way for the Chinese government to bring capital into the country, to sell off coins as the value rises. And I just think that the Japanese prime minister even told his people, yeah, it's probably not a bad idea for you to accumulate some of these coins. And it's going to be interesting to see the first country that their government starts buying coins. I'm talking about the real coins, the big three or the big five, or whatever you want to say. And then you're going to see, I think that's when we go from this crazy phase in 2018 that you're talking about to the super crazy phase going into 2020, when, look, the Japanese, why wouldn't they use worthless yen to buy an appreciating asset like a crypto coin? And at the same time, they're bringing capital into their country. It's not going to take a rocket scientist to figure out, hey, whoever gets on first is going to win.
Yeah, I think a smaller country will do it first, but then that's going to start a trend, if you will. But there's so many facets to the growth phase of this thing that it kind of boggles the mind if you start to try to really think about it. And the amount of volume of currency that would mean that it's coming into Bitcoin, even the cryptocurrency space as a whole, is pretty wild. So I think some of the crazy valuations that you hear about aren't that crazy when you think about it in terms of supply and just the sheer amount of money that's on the sidelines. Because this is a non-correlating asset so far. I think at some point it will correlate because it'll become a flight to safety. So it'll probably have the gold type correlation where markets are in trouble, gold's up, and things like that. Right now it doesn't. It has no correlation to anything at all whatsoever. Yesterday when the markets took a dip briefly, Bitcoin was up. And I think that's got, Wall Street's just clamoring for an asset like that. So there's just a lot of bullishness to the buy side here with just supply and demand, and money's on the sideline. And I mean that's just one part of it. There's so many aspects to this.
Yeah, and the thing I try to explain to people is and you're already there because you're starting to view the world in how much it costs versus Bitcoin. What people fail to understand is that we're talking relative basis here. You know, Bitcoin of $1 million, looking at $1 million against today's dollar is one thing. $1 million, versus Bitcoin, it's really all about the purchasing parity. What will an equivalent $1 million Bitcoin buy in 10 years versus what it can buy today? I think that's what people really don't have their arm around. Is that is it and you put it out there, which was great. It was the remember the dollar chart you posted on Twitter. It's where it's we're having a bubble, not a crypto bubble. All a cryptocurrency is essentially a mirror, and it has a couple other twists to it because it's a currency that is non-parasitic. That means the banks and the governments can't corrupt it in the way in which they've corrupted other currencies before by just simply printing it. I don't know how many nodes are out there, Phil, but you have it's basically like you have half the world looking over your shoulder, counting how many coins are out there and what they're worth versus somebody can all of a sudden show up in a bank and print $10 billion worth of new credit overnight, unseen. We have no idea really what the Federal Reserve and the banks are doing. Here, you can't hide anything.
No.
And it protects it. And that's all. And what people understand about money is that money has to be trusted. And so if I trust that you can't create a Bitcoin on me, then I know that I can do business with you because likelihood between start of my transaction and end of my transaction, that Bitcoin is going to be relatively stable in value to the transaction we're going to do. And that's all that really matters to people with money. Right. And the bankers and the liberals and the governments hate that because they can't make hard choices, so they rather just print more and just backdoor people poverty.
Yeah, no, exactly. Speaking of nodes, there's about 10 to 11,000 nodes reachable. Actually, about almost 11,000.
Wow.
And so most of those are the Bitcoin core code. So a small percentage is Bitcoin ABC, which is the Bitmain version. But it's all. I mean, this is the network, and this doesn't even. That's just full nodes that are running. You're running the entire copy of the blockchain on it. But there's also nodes that are running that aren't two-way. They're not, you know what I mean? They're light nodes. So, and that's many, many more thousands. So this doesn't even really represent really truly all the connections in the network. But I mean, it's worldwide. And so this is the economy that you're dealing with, and that's why everybody, this has taken 8-9 years to develop, and this is what people, money on the sidelines, are going into. They're not going into something that doesn't have good developer base, doesn't have good code or new code. All the research has been done on Bitcoin. So when it comes to the altcoins,
that's incredible.
Yeah, no. So when it comes to the altcoins, big money's not really looking at altcoins yet. It's going to be more. I think Ethereum will get some attention because there are some derivatives coming out for Ethereum, and essentially institutional money needs to see some sort of derivative or institutional. I'm sorry, they need to have a hedging instrument because they have risk parity rules that they have to adhere to and things like that. So once you see that, like if there was ever Litecoin futures, I think Litecoin would just explode. I don't know if there ever will be, but I think definitely Bitcoin, Ethereum. We're going to see some pretty good growth in 2018 for just due to institutional inflows alone.
Yeah, and you want me to slide over and talk about the futures market a little bit?
Yeah, we got enough people in here, so let's do that.
Yeah, so I guess December 18th is the official start of the of trading contracts on Bitcoin futures. What I know so far, I think there's going to be 3 entities that are going to offer the contracts. I think the contract size is 4 Bitcoin, and I'm still doing research on, settlement. Is it going to be a monthly? Is it going to be a 4 time a year thing? And I don't know what the margin's going to be. And Phil and I were talking, and just a first perspective, people try to understand what a futures market is that the futures market started in Japan. I don't know if it's the 14 or 1500, somewhere in there. There was a new emperor came into power, and before Japan was very feudalistic. It still is after this new emperor gets on board, meaning that there's warlords that controlled portions of the countryside, and they pledged their allegiance to the emperor, and they paid their gifts, but they occasionally they would get together and kick one emperor out, bring another emperor in. But this guy was pretty smart, and what he required was that everybody that owned one of these kingdoms had to live in the main city, and that way he could keep an eye on them, all of them, and so what happened was when these people all got together, it was keeping up with the Joneses. So there was a lot of parties, and there was a lot of I'm richer than you, and so on and so forth. But their main way of collecting wealth was they had tenant farmers, rice farmers, and they would collect the rent, but they could never get the rent until the farmer could obviously harvest the crop. But they needed money today. So there were people with money that weren't farmers. So what they did was they would allow those warlords to sell their rice into the future. They would basically get money today, and they would pledge the rice. So how a future market's supposed to operate is that the one who's selling needs to own something, and the one who's buying is obviously taking the risk that they're buying it at a price, or they got it at a price where they can turn around and when the harvest comes in, cash out, settle the contract, and move on to the next contract. Well, Wall Street bastardized a lot of that because they came in and they were able to basically create contracts out of thin air and short them without having to ever, be a producer. And they just counted on contracts getting rolled over or being settled before the contract ended. Well, what we know about the Bitcoin futures, and probably Ethereum the same, is that they don't have to settle in Bitcoin. So, if you were a buyer of Bitcoin futures, let's say you bought it hit 10,000, you said, I'm buying a contract that's going to settle in March, and I got it at 10,000, I'm going to hold it. And then it goes up to 15,000, to hand you a Bitcoin. They're going to pay you out in cash. And so I'm not too sure if the people that are holding these coins are gonna sell them. And number one, and number two, do not short a futures contract with Bitcoin unless you own one to cover. The president of IBB said that they'll create an artificial shortage and nobody will sell their coins, and you can see Bitcoin go from 10,000 to 70,000 in an instant because somebody is going to be scrambling to settle. And we don't know how they're going to back these futures contracts. We don't know if they're going to put insurance behind it. But if enough contracts settle, it could create the same problem we had with Lehman Brothers. And that was his point. Bitcoin could literally blow up the financial markets like Lehman Brothers did with the mortgage contracts in 2007. So it's going to be interesting to see because there's no governor on how much is being produced because they don't have to show, these three entities don't have to show that they own the coins to short them. So, so if you're retail, stay away. I think it's going to be a net add for us, unlike gold where they could just short it and force people to cover or what they call puke up their gold. There's no producer of Bitcoin that has to puke up anything. So the people that have strong hands at these prices, they don't have to do anything. What does it cost? $1,700 to produce a Bitcoin right now, Phil. So unless Bitcoin gets down to like $1,500, there's not a miner there saying, "Well, I better sell my contract forward." You know what I mean? So that I get paid to do this mining. Until mining prices get up to where the price is today, the futures market, I think, are really net positive for holders of Bitcoin, and you don't need to short it or sell against it. So that's kind of my view on it. It'll be interesting to see what happens, but I think it'll probably be one of the reasons why we'll get a blow up in prices.
No, yeah, I think so. And the other thing too is that I agree with you that retail shouldn't be doing Bitcoin futures because you have to be pretty well capitalized. So essentially, what they're doing is they're making the contract size. So it's cash settled, like you mentioned. That's just like the ES futures, the S&P futures. They're making the contract size 5 Bitcoins. So let's just take 10,000 for round numbers, $10,000 Bitcoin. So that's a $50,000 futures contract. However, you only need to have 10% for margin requirements. So bare minimum for trading Bitcoin futures, you need to have $5,000 if Bitcoin's at $10,000. So if it's at 11,000, then you need 51, or I'm sorry, 6,000, right? Is that right?
Yep.
Or 5,500, whatever. Anyway, so bottom line is you gotta have some dough to play in the game, and the actual the way it works is that for the tick is going to be $5. So if Bitcoin fluctuates up and down $4, it doesn't really move one tick. If it moves one tick up, you hit that $5, it's going to move one tick up. Then you're going to, if you're long, Bitcoin moves $5 because it's a five Bitcoin contract. You're actually going to instantly be up $25 on that. So if you went long, you bought one futures contract, and it goes up one $5 tick, that's $25, and vice versa. If it goes down, it's down $25. But as you guys, spend a day watching Bitcoin price lately, that's nothing. I mean, it's not going to move in ticks unless it's very, very quiet market. It's going to move in 10 tick increments. So a huge scalping opportunity if you're a really good futures trader. But it's the problem with it also is that they're going to have circuit breaker rules. I think the circuit breakers would have went off like 17 or 18 times on 2 days ago. So there's that problem. There's also the problem that it doesn't trade on the weekends. So I don't think, unless you're extremely open to risk, you're not going to be long or short over the weekend. So I would assume the futures, most people would close out their futures options Friday. Just because there's what's that?
Tremendous opportunity to go long, just like trading oil or trading gold or trading volatility. You're crazy to hold those short over the weekend in a futures contract. You'd be quadruple crazy to hold a short Bitcoin contract over the weekend.
This is gonna. I'm sure there's gonna be some people that are gonna try it and they're just gonna get roasted. I don't know that there's any futures market as volatile as this is going to be. It's just a lot of leverage, for the average trader.
I would imagine the margin is going to be so high, Phil, that because that's what the IB guy said. He goes, this could put me out of business in one weekend.
No, margin's 10%. Margin's 10% of a 50,000 contract.
That's crazy.
So there will be retail. There's, $5,000 margin. There's going to be some retail guys in there, but I think they're gonna get alligator arms pretty quick because it's 5 contracts, right? And just if you figure for $10,000 a contract or a Bitcoin, that's 50,000. They want you to have 10% skin in the game, so it's 5,000 on that if you measure it from that price. Bob, I lost your audio. No. Try again.
Am I back?
Yeah.
Okay. Sorry about that. Yeah, the way it's going to play, it'll be interesting to see because uh, I'll have that chart up all the time. It might be one of those things where we find the ATR fill and just put in buy orders at the bottom of the ATR every day and see if you can catch catch a push down and then just hop off. But don't short it. I think if any of you guys listening today, don't short Bitcoin in the futures market. Just don't do it. It's not worth it to you. The reason why people will short it is somebody that might be holding 1,000 or 10,000 Bitcoin in an institutional account, and they're trying to smooth out a volatility, and they're willing to give up some upside.
Yeah, I agree. It's definitely definitely a tool for the funds, but I mean, you can make money. I'm sure there's going to be guys that are adept at trading futures and are going to be able to just. I think you just scalp the, to as far as a scalping mechanism. I think the thing is just crazy. It's a monster, but you have to be super. That's a whole nother gig. You got to be super disciplined. So.
I mean, I'm just looking at the 1 minute chart right here on Saturday morning, and Bitcoin went from 10,990 to 10,900 in 7 minutes, and then back up. I mean, these are those are decent moves when you're leveraged 10 to 1.
I agree. It's yeah. I mean, like you said, these moves. Okay, so like here's the chart, the 1 minute chart, and you're going from 10,994 down to 10,900. So let's just say that's $100 move. So that's divided by 5, right? So that's 20 ticks times $5 per contract. I'm sorry, $25, right?
Right.
So that's just on one contract alone. That's a huge amount.
Well, I mean, just look at the move on. Was it Thursday? When's the day we had the big move? I mean, that would have probably put people in the poorhouse.
Yeah, definitely. Definitely.
Yeah, even if you're long, and you got caught. That's what I'm saying is that the moves are too big right now for you to be able to react to. And you got to realize you're buying this stuff on Poloniex or Kraken or Bittrex, and the spreads are going to widen out too. So all of a sudden, when things go bad, the spreads go out, and you're going to be like, well, hey, I'll take $1 loss. Well, guess what? It starts moving down. All of a sudden, the Bitcoin spread is $100, $200, $300 because the market makers there aren't going to want to lose money. So that's why I said it needs to be really. I would sit on my hands for 90 days to watch it. I wouldn't play around with it, and then I would look for these huge pullbacks because people get all screwed up and just add on add to your personal wallet with Bitcoin themselves. Just stay away from the futures market on it.
Yeah, I was thinking.
Although if they do options on it, that might be a play. Because then you define your risk. That might be an option for us.
Yeah. No, I think you have to just let the fund guys pour liquidity into that futures market. I wouldn't get into it right away. Like you said, spreads are probably going to be somewhat of an issue. And let it, like you said, I think, give it 60 to 90 days to mature a little bit. And that way, too, you can kind of watch what's going on. It should move pretty much one for one with the underlying Bitcoin market. But I wouldn't dive right into it. There's no way. Even we got this 1 minute chart up, which our indicator wasn't really designed to be run on a 1 minute, but you can see where you have to, because you'll have to keep your stops really tight. But this market is so aggro that you'd almost have to automate. You know what I mean? You'd almost have to automate your entries because it's just so fast. Or you have already a pre-programmed, like in NinjaTrader, you can have a pre-programmed rule set for your entry, so there's automatically a stop set. Like if you don't have, there's no way you should be doing this unless you have an automated order entry, at least on the part of where your stop is already set, where your targets are already set, where your break even rule is already set. So in other words, if the price moves in your favor by like say 5 ticks, it moves your stop up to break even. All that needs to be automated. NinjaTrader will do that. You have to manually enter the order, but the rule set for your order entry is automated, and you can create like 3 different rule sets depending on what price does. So you have your stop, you have if price goes up X, what then what do? You move your stop up, and it's going to move so fast you have to do that. There's just unless you can stomach large drawdowns, thousands of dollars of drawdowns, and manually trade it, most people aren't going to want to do that. So this is like as the highest level of trading you could possibly be looking at, and you really need to know what you're doing. So if you're new to trading and you have a brokerage account and you have access to futures, don't even do it because you're gonna get roasted.
Yeah, and let me tell you, because I trade mostly energy, oil, and natural gas and gasoline occasionally. Those markets are the most liquid in the world, and you get gaps in those markets. I can't even imagine how gappy it's going to make Bitcoin and Ethereum until they get this thing smoothed out. So, and that's the thing too, especially if, Bitcoin and Litecoin and Ethereum, those guys trade 24/7. Unless those futures markets match that, which they probably won't, is that you're going to get these tremendous gaps on Sundays or the daily rest, that they have in the futures markets.
Yeah, and I don't think that they're going to close those gaps either. I think everybody's like, oh, gaps close, but no, because most futures markets are following roughly the hours of the underlying, right? And so those markets gap because there's a stop and a start, whereas Bitcoin there is none. So these future gaps, they'll fill on larger pullbacks, but it's not like gaps on regular markets are kind of a self-fulfilling prophecy because everybody looks at the gap and they're like, oh man, that's going to fill one day, and everybody targets that. But on the underlying, it doesn't have those gaps. So that's another weird thing where Bitcoin futures gaps, chart gaps are gonna stay gapped. Don't expect them to fill.
Yeah, and I think that's going to screw people's heads up because people have been trained that gaps fill 92% of the time, or some crazy number. And I think it's going to be
Yep.
Yeah. It's going to be interesting. I think it's a net positive. So anything that brings more money into the asset is good for people who hold the asset. And who knows, it may take pressure off off of gold and silver, because they're going to have to spend all their time shorting cryptos. Now the bankers have another leak in the dam, so to speak. And now they're going to have to divert attention to trying to squash, this threat, to the old order. So it might be net good for the precious metals. We'll know pretty quickly, though, I think.
No, it's a great point. How's this going to affect other things? Right now, I think the non-correlating aspect of it is probably true and will hold true. I do think, like everything else, if money's going to go into a certain asset, then there is going to be a correlation at some point. Right now, that just doesn't exist, but over time it will. But for the time being, because that's the case, there's a lot of upside that's going to flow into this. So I don't know. We really don't know. We're just going to have to wait and see. But I don't know immediately if we'll see any side effects. But it will be say 6 to 12 months down the road, it will be interesting to see what correlations do start appearing.
Sure. And somebody on the side is giving us some more information. Thanks. Is it Craig? Thanks for that on the circuit breakers. Yeah, I wouldn't be surprised to see a few of those 20% days. And it's already proven it can do that. Just did it last week. What's going to be really interesting is that they're going to put a circuit breaker on the futures contract, and the live market's just going to say, okay, that's great. You're stuck we're continuing on. I don't know how they're going to be able to match, control of this, because it's not like Bitcoin and Litecoin are sitting on some sort of exchange where they can get the 5 owners together and say, hey, if we have a circuit breaker, you need to shut down too. Phil just showed there's 11,000, nodes out there and millions of owners, and they're going to say that sounds like a you problem. So it's going to be really interesting to see how they're going to reconcile a whole new way of trading with a whole new asset class that is totally different than anything they've ever seen before. So, be fun to watch.
No, yeah, it really will be. And they've never done. I mean, all other markets have been very orderly and things like that, but they've never done it on something decentralized before, ever. And I just think first thing I would do is look at the futures volume just to kind of gauge how much participation is in it. My guess would be that's pretty light for a while, but and then how are the spreads? The spread is the price between the bidding and the asking price. If they're really wide? That's going to be a problem for volume because people aren't going to trade with each other as readily. So, but that spread depends on the market maker, and the CME is going to have their market makers. So, I don't know. It'll be very interesting to see. But if you're going to be a market maker in that market, then my hat's off to you, because that is just that's a pretty challenging thing to do, because you have to be capitalized. Market makers make their money on the spread, so the price difference between the bid and the ask, they're just there to make a market, but they have to have huge capital to do that because they have to supply both sides. So
yeah, it's gonna have to be sovereign backed. That's the only thing. Don't you think?
I mean, the capital requirement for that's huge.
Yeah, I mean, there's no way I would ever take that on. And if I owned an exchange, there's simply no way I'm going to let you, unless I know I have your collateral if I need it. I mean, because people don't realize, if you got a 20% down move in Bitcoin and they margined you out at the bottom, you're gonna and you claim you have $100,000 in assets. I guarantee you, most people, when they fill out those margin reports, yeah, how much net worth you have? Yeah, I got like 300,000 liquid, and when they probably have 20 grand, total, and then they go belly up at 300K loss, and then the exchange knocks on their door, hey, we're looking for our money, what money,
Yeah. Well, look at, I mean, you talk about market maker, capital requirements, but even if you took, so here's our signal on a 20-minute time frame, right? And this is super volatile. So you get a long here, right? And the way typically you look at long signals and stuff is that once a bottom is in, that's where you're going to look for putting your stop below that. Okay, so but say you went on this long, that's a $700 move down. So you have $700 divided by $5 ticks, right? So that's 140 ticks times 25, right? $25 per tick. So you'd have to stomach a $3,500 drawdown before you started making your money back up. And then you're trailing your stop up here. So you'd probably stop out somewhere at 10,600 from 10,100 roughly. So that's another. So on this trade, by the way we recommend trading it, you would have made $3,500 roughly. But you have to stomach that drawdown because you're waiting for a price bottom to go in. So I mean, it's not. That's why I say if you're retail, it's probably not a product you're going to want to trade. You're better off trading just a regular Bitcoin because you're not leveraged so high. No, first of all, there's not many people in the world that can trade that have a 5 Bitcoin lot size to trade regular Bitcoin with anyway. People are usually swing trading fractions of a Bitcoin or 1 Bitcoin. So it's less dramatic, right? 5 Bitcoin leverage is huge. So especially in a market that moves like this. You really only you could make money trading zero point 0.1 Bitcoin in a market that moves like this. So it's big money. It's a big money contract.
Yeah, I mean, just look at Litecoin since Thursday. I put a position on at it dropped down. I put a stink bin at 70 just in case somebody tried to test that hammer, and then I bought on the buy signal, and the buy signal is still holding. And so that's a 17. It was a 15-point move in 3 days.
Yeah.
You don't get where else do you get that kind of movement? It's incredible.
Yeah, the indicator on Litecoin on the daily for daily like swing trading on Litecoin is killer. It always seems to signal on this long term trend line, and you know before a move up. So it's one thing that indicator is really good at is signaling when it's kind of going side. It does a really uncanny job of signaling right before a spike, and you see that on all different types of coins too. So we're going to get an alert system going on this, so you'll be able to just get alerted when a long fires, and that so you're not having to stare at multiple charts all day.
Yeah, we just have to work through some of the limitations inside of TradingView and how to export the data. And we're even looking at some auto trade features too, but it depends on the how good the connection is with the actual exchanges. Poloniex and Kraken and et al. That the spreads are such, because they only will take a stop limit kind of approach. So price can move around your order. So there's some really interesting things that we're going to be doing. It just takes time to kind of, we got to live with it ourselves for a month or two just to make sure what we think should work actually does work. And in fact, Phil and I, we've already created a second version of this money machine already to help when we have, I don't want to call it sustained drawdowns, but more persistent, to catch you from buying back too early. But that's in testing, and that's gonna, for those who already own the crypto money machine, we're just simply going to add that option for you. You don't have to pay for it again or an enhanced fee. So those are the kind of things that we're always tweaking to make the profit factor as high as possible that you can in trading. So look for those things. It's pretty exciting. Phil and I we're more than pleased with the way this turned out, and it was an incredible combination of the way I trade and the way Phil trades, that we were able to put something together like this that worked really well. And it certainly amped my performance on trading the crypto, so I'm pretty stoked.
Yeah, and we're not going to turn something loose we wouldn't trade ourselves. So yeah, it's going to get battle tested for sure. Bob, I was thinking I would just cover the big three amigos real quick, and then whatever questions, and then we'd probably wrap up.
Yeah, that sounds good. We always burn the time so fast. So,
yeah, but I think we covered kind of the risks, pros and cons of the futures contracts. The only other thing I could add to that is price-wise for the underlying Bitcoin, I think it's going to be bullish. I don't think it's a matter of the futures. They made a comment that the futures will tame Bitcoin price action. I don't agree with that, because I don't think unless you're settling the actual underlying, which they're not. It's just a cash settle, so it's essentially a side bet, which is, it's common practice. That's what the S&P futures are. But the S&P, the ES futures on the S&P doesn't dictate the S&P price. What dictates the S&P price is what the funds are buying into on the S&P. So it's the S&P reflects the S&P futures, the ES futures, and the same thing's going to be for Bitcoin. So I don't agree with the statement that it's going to tame Bitcoin prices. It's just going to allow the funds to hedge, and that's going to be bullish in and of itself. And that's what the institutional money was waiting for. Was waiting for institutional instruments to be able to hedge their position. So for those reasons, it's going to be bullish for Bitcoin, but in no shape or form do I think it's going to have any taming effect at all.
Yeah, I agree.
So With that being said, I'm going to dive into Bitcoin, Ethereum, and Litecoin charts real quick here. So on the daily, guys, what we're looking at is I don't see anything other than the fact that all of the indicators are very overbought and typically are at levels where we do get a pullback from. And as I was mentioning earlier in the stream before we kind of got going, when you look at bottoms, and I like to look at a bottom formation. Sometimes it's 2 bars, sometimes it's 3 bars. We had about 60,000 of volume on that bottom, 90,000 Bitcoin volume on this bottom, 88,000. So you can kind of see now volume's coming in and it's kind of a consistent reading. And then we had this huge reading here, and it's almost like this doji was the bottom. This doji bar here was the bottom. But this, I need to see a down and an up, and that was 111,000 Bitcoin volume. Really, really huge. And these are going to continue to grow. When you look at, if you see this shaded area here, this is Bitcoin volume and average volume, I should say. So as the average volume grows, you see price very consistently moves with it. So we're just getting started volume-wise, because just people, the amount of people coming online to the crypto space. Now, Asia's probably far ahead of the world. So per capita, as far as being crypto aware, they're much higher. But on the whole, most of the world just isn't crypto aware yet. And next year we'll change that. You're going to go from the innovator stage to the early adoption stage, and that's gonna this average volume is going to go way higher. And so doesn't take a rocket scientist to look at average volume and see how it affects price. That this price is got a lot of upside for next year. So that's kind of the macro picture. Right now, the daily's overbought. Now this could correct in a consolidation fashion. It also could be the start of a very parabolic move up, in which case your overbought, oversold indicators aren't really going to do you much on a larger time frame. You'd probably go down to, in fact, when Bitcoin's very volatile, you almost have to go down to like a 10 or 5 minute chart. Like right now, the hourly is a buy, and that fired here, and I would expect probably at some point over the weekend that this trend line breaks up, would be my guess, just based on the price action going right now. If you look at a 4-hour chart, I like to look at 3 different time frames, so small, medium, large, and 4-hour was a monster buy down here on this pullback. It was just embedded down, and those always resolve pretty violently up with Bitcoin. And so now we're overbought again. We do have a divergence on the 4-hour, what that means is we've got actually, I'm sorry, no, we don't have a divergence. So what we're looking for is, if price does move higher up here, we're looking for this RSI to at least come up to this level here where it was previously. If it doesn't, if it stops here and then comes back down, that would be a bearish divergence. So I would look for a pullback on any new highs going into tomorrow. I would look for a healthy pullback, and then but a move higher. So I think pullbacks are going to shrink in percentage terms. But I do think we're going higher into the weekend. That's just looking at price action. So on Ethereum's at an interesting point here, because for me, I look at, if you retrace more than 50%, then you're looking at, the bulls or the bears taking control, vice versa. So for Ethereum, I'm looking at this 473, 474 level. Once we get a nice clear break of that and a close above it, I think then we're definitely back. And so the current fib target is 574. This high here hit our target we had sitting for even way back here. We had a fib target from this high, so that was back in June. We were waiting this based on this retrace here. So actually the fib target was established in July. So it took us a half a year to get to, and it just consolidated largely. And I blame this on ICOs, because you have money sloshing in and out from ICOs. I think the ICO phenomenon is taming a little bit. People aren't seeing the flip action that they had, so that's going to probably help to the upside. And then as the futures and stuff start coming online, it'll help the price. But so the current target right now, and I'm fully expecting this to be hit, is 574, 575 area. And then we should see some I think just some orderly ups and downs to the upside on Ethereum.
Yeah, and
Litecoin,
if you look at Ethereum too, Philip, sorry to interruption, is
no,
that I mean it was perfect. This is this is why it's so nice to trade these coins. Is that it gave a perfect back test of the breakout
yeah,
and held. And I mean that should be like alarm bells going off if you're a trader. Hey, wow, because when we talked about it, we said we had our long signal here. Once it hit the double top, it just blew through that. Primarily because that one guy was talking about Ethereum's going to hit $500, and then when it released, it came back and it held the breakout. And this is important because now this line here, in my view, the 400 line is kind of like the new Maginot line, right? If it stays above 400 on the next pullbacks and keeps going up, then we know it created new support.
yeah, that's exactly right. So yeah, to me it was like once because it had consolidated when you especially in cryptos, if you have a super long consolidation period, when you break out of that, it's usually gone for good or at least for a very long time. So yeah, I think we're now in the next phase of up, but Ethereum acts totally different than Bitcoin for various reasons. I mean, it is a different animal, but I think it's got a. I don't think it's going to outpace Bitcoin in growth, but if you're long in Ethereum, I don't. You're going to be fine over the next 12 months. It's just I like to think of things in terms of Bitcoin. So I'm not bullish in Bitcoin terms. I am very bullish in dollars or euros. Okay, so now Litecoin. Litecoin has always basically since the rise of cryptos in general back in April. That's when there was like an awakening, and you can see like if you had a bunch of Litecoin now, then you're just killing it because it's like a $2,000 increase or 2,000% increase. But it's always kind of like got ahead of this trend line and pulled back. Now, obviously, we didn't have this trend line back here, but you can see this is kind of the median for Litecoin price. And every time we got way ahead of it or somewhat ahead of it, we just kind of pulled back. And as I was saying at the beginning of the stream, I think this is going to change now. A lot of it has to do with just general money flowing into crypto. And I think that Litecoin is going to be looked at as silver to Bitcoin's gold. We've mentioned that a lot. But it's not just a poor man's Bitcoin kind of thing. They have been front running the technology. They were the first to implement SegWit. They're doing atomic swaps and lightning atomic swaps and a lightning network. So that's going to be able to you'll be able to. Here's something that most people don't grasp is that what that will enable things to it'll enable the ability to cut down transaction costs. So you could foresee a time where if you have like your hardware wallet and you want to send money to Bob or whoever or to the exchange, the network would be able to calculate at that given time, are the mining fees cheaper on Litecoin to send it? And it'll give you the option to do that. And what will happen is, without you having to do anything, is you'll say, yeah, I want to do the Lightning option, and it's going to send your transaction at a much cheaper transaction cost. And so you could send like $10,000 for pennies, but it would do it through Lightning nodes running on Litecoin. So there's now this transactional value to Litecoin that most people don't grasp could happen, and I think will happen. So all that stuff is really, goes back to where we're going as far as what role is every crypto going to have. I think Litecoin has a pretty big potential, and there's other ones too. There's Dash, there's Vertcoin, but the reason why I focus on Litecoin is because you have to look at what's readily accessible to people, and it goes back to the big three: Litecoin, Bitcoin, and Ethereum on Coinbase. And Coinbase is big, so that's gonna have a huge effect on those coins and their value. And so Litecoin, if Litecoin is going to be a payment type channel, it's going to have a leg up just because of that exposure. So you could argue which coin's better for a payment channel. I think they all have their pros and cons, but you also have to look at the market and what's accessible. And I think for the foreseeable future, because of Coinbase's influence, whatever is listed on there is going to have, it's going to be pretty bullish if you're listed on Coinbase. So I know they're looking at listing other things. My guess would be that you might see like a Ripple or a Dash being added. something like that. They're not really saying, but I could see that happening. They're gonna release Bitcoin Cash allotments to their customers in January. I would imagine they're going to probably list Bitcoin Cash, but Bitcoin Cash isn't where the market is, so probably a lot of people will convert to Bitcoin would be my guess right off the bat. They don't actually even have to buy or sell Bitcoin or list it as an option to give the allotment. So you can't really say they're going to list it as a additional coin to be bought or sold. That's not a requirement for giving the account holders their allotment. But I think if they do, I think you're probably going to see a bunch of people cash out and convert back to Bitcoin, which puts further bearish pressure on Bitcoin Cash. Is kind of the way I'm seeing it. We'll see. You don't know until they get there.
Hey, Phil, can you talk Bitcoin Gold? Now I can't go anywhere without getting attacked with crypto questions, and a couple people have or think they're getting Bitcoin Gold, and I don't have anything, so I don't really understand when it's going to be released, if it's going to get released. So can you maybe walk us through that?
Bitcoin Gold was allocated to, I know Trezor, the hardware wallet, whatever you had in there at that time was allocated to you. I think Bittrex allocated whatever Bitcoins you had. They gave you the Bitcoin Gold fork equivalent. And Bitcoin Gold, if you guys don't know, is just a fork of the Bitcoin code. And they created it's basically an altcoin based on Bitcoin. And they tweaked it, gave it some other features they felt would enhance the Bitcoin network. All of those things are going to eventually happen to Bitcoin, but because Bitcoin is such a huge market, you don't want to, you want to battle test code, right? No one's really knows how battle tested some of these forks are, and so it's just you don't fool around. When you add a feature, you have it peer reviewed, you have it on a test network, test net, and then everybody agrees, yeah, there's no flaws, it's ready for production, and you release it. So the big problem with these forks is you just, the big con is that you just don't know. You really, half the time, you don't know what's going on behind the scenes with development. If the code's even, if it's even accessible, like open source. So with Gold, if the wallet provider is not giving you the allocation, then you're just not getting your Bitcoin Gold. If you're savvy, you could go and take your private key. There are ways to do it. It's kind of technical, but you could import your private keys into a Bitcoin Gold wallet and then get your allocation that way. But you want to do that offline in like a cold environment. And I'm not going to get into that right this second, but it's a way to do it if your wallet provider isn't giving you the allocation. And the reason why these guys aren't giving you the allocation is because it's a lot of work. They have to incorporate the code to talk to their network, the Bitcoin Gold network, because essentially it's just another network of nodes and stuff like that, and they have to enable the wallet and stuff. So for most people, the retail folk, it's just going to be a matter of wherever they have their coins, whether it be it on an exchange or an online wallet or a hardware wallet, the wallet provider has to basically say, yeah, we're going to give you your allocation. But a lot of times I know a lot of wallet providers are still looking at the code and they still haven't decided what they're going to do with it yet. So if you're interested in like when the forks happen, because you can Google Bitcoin forks, and I think there's a couple more this month, then you could probably go, if you're really interested in getting your allotment, find out who does support it. You could move your Bitcoin allocation to those providers, and then that way you get your allocation and you can sell it or do whatever you want with it. That's one way to approach it. Otherwise, you just wait for your allotment to be given to you. Like I said, Trezor wallet, Trezor's good. They're pretty proactive. So if they deem that it's viable and it's safe, they'll give you your allotment pretty quick. They did that with Bitcoin Cash. They did it with Bitcoin Gold, and it worked pretty well. So, Bob, I lost your audio.
Yeah, I muted it because my dog wanted to get in on the video. We have, I think, Jay, you have a Trezor wallet too. You had some questions on that, but that's interesting. Yeah, because I know Zappo's not allocating right now, and I know some people are are frustrated. So I thought I'd bring it up for anybody else who might have been thinking the same way.
Well, I think that's it for the
Yeah, I'm
charts.
done.
Unless anybody has any questions, we'll probably wrap it up.
Yeah, most people look like I don't see any questions new unless yeah, I'm stuck anywhere. But
Litecoin, we're expecting about a 115 or so target, and then I think we'll pull back, test these prior highs, but I think we'll see a lot of this stuff going higher. So
yeah,
sorry about that.
yeah,
Anyway,
yeah. If anybody has any topics they want us to talk about and discuss, just throw them on this video or in the comment section when we replay this. I'll clean it up a little bit, and then also any videos we do during the week, just say, hey, can you guys talk about this or that? We'd be happy to. And just so you know, too, on the non-crypto side, I continue to add to natural gas position. A persistent cold front and pattern is coming into the central and eastern U.S. and it typically will drive prices higher because they've been not injecting storage into the downstream storage facilities. They've been trying to drive the price down, and they're going to get caught short. And I think we're going to see some big moves. 2013, 2014 is the analog to this, and natural gas went from $3 to $6. So it's a great risk reward. I think they put the bottom in last week, and so even if you're holding one contract, your risk is like potentially $2,000, and your reward is potentially $20,000 to $30,000. So it's a good R&R to work this thing to the long side. So FYI on that. And with that, I'm done, Phil, and I really appreciate everybody's time. And I think that's it for the questions. Yeah, taxes, we're against them too, Brian. Phil, thanks so much for your time. I know you got up early to do this, and enjoy your rest of your weekend.
yeah. Sorry, my mic was muted, but yeah, on the point of taxes, yeah, it'd be better to hold tax-wise when you're trading. You create tax events, but at the end of the day, if you're holding, then you're more, you're looking at long-term capital gains when you do decide to liquidate. If you ever decide to liquidate, I mean, could turn into a point where you don't have to ever get out of your Bitcoin because people are taking Bitcoin. That's another side of it too. The tax laws have to kind of evolve from where they're at. It's really kind of muddy right now.
Yeah, and just clear too is that if you're buying Bitcoin to think you're going to dodge taxation, I think you're naive. The government's going to get they're going to get their piece of the action on this.
Yeah, it's like anything else. It's not, people are like, oh, they're going to tax crypto. It's over. Well, why? It's like anything else. They're going to tax you if you're making money to pay taxes. That's just with anything. So it's not a big deal.
Yep.
All right.
Well, cool. All right. Thanks, guys.
Thanks for watching. And we'll send out a video tomorrow, give you an update on the crypto world. So look for that. Thanks.
Thank you. Bye-bye.